Hello guys, welcome to another video. In this video I'm going to be sharing with you how I make use of support and a resistance level to find an opportunity in the market. I'm going to be sharing with you things I always considered anytime I want to use a support and a resistance level right in the market. So if at the end of this video you found value on this content, do ensure you subscribe to this channel, hit notification bell so you miss any of our amazing videos. As a reminder, everything I'm going to be sharing with you right here on this content is based on my own personal experience in the market. I'm a trader, I'm not a financial advisor, so if you need to take any financial decision, do ensure you consult your financial advisor. So right here on the chart, I'm going to be making use of a 15 seconds candles. I'm going to be using the normal Japanese candlestick, and I'm going to be setting my expiration time to be on 1 minute. So when you talk about a support and a resistance level, these are areas in the market where the markets bounce from. In the case of a support zone, these are areas at the downside of the market where the market is being prevented from going further down. So the market always hit it and bounce from there towards an upside direction. While in the case of a resistance level, it's always a ceiling at the top of the market where the market hits and rejects from there towards a downside direction. So right at this particular point, this is an example of a support and a resistance level, the support zone where the markets come into and bounce towards an upside direction, and right here a resistance level where the market bounce from and go towards a downside direction. So I think I'll have to go into the market. So right here I found an opportunity. I'm going to go for an up trade. So one thing I considered right here is the formation of a support zone right at this point. So the markets previously come down to this particular level and move towards an upside direction, and later in the future the market actually come back to this particular point and it started rejecting towards an upside direction. So one of the rules I always set for myself is that in the case of a support zone, there must be a two touch to confirm my entry point. Not only that, I should also see a consistency of the candlestick going towards an upside direction, especially going towards a resistance level. So right here, this serves as my support zone because the market actually come back to this particular point to serve as a 2 point. And secondly, I'm able to see a consistency of a candlestick right at this particular point. So right here, I think I'm finding another opportunity. But firstly, I'll have to and let me map out the key support zone and the key resistance zone. So this serves as my support level and this serves as my resistance point. So right here there are break of structure. This might be a fake out, but I just have to keep monitoring. So basically this might be a continuous move, and the reasons why I go for this is because I also realize that this is also another support zone. So basically the market might actually got rejected from this particular point. One of the things that always give me an idea between a continuous move and a fake out is that in the case of a fake out, the market always print out a bit, doesn't go far just like the way this actually went and continue going towards an upside direction. But in the case of a continuous move, the markets keep moving in a high candle movement, just like what I have right here. But in the case of a fake out, the market just breaks out of the box just a bit and continue going towards an upside direction. So right here I think I'm finding another opportunity. So right at this point, let me go for the position. So I'm going to mark out both my support and the resistance level. This serves as my support zone, and this serves as my resistance zone. So reasons why I actually go into the market the other time was when I saw this big engulfing candlestick, which actually serves as a reversal candlestick patterns. That is why I actually go into the market the other time. So this serves as a reversal candlestick patterns. This engulfing candlestick is what gives me confirmation to go. And right here, I actually make another win. So right here, I think I'm finding another opportunity. So I have to firstly mark out my key support and resistance areas. And this serves as my support zone. So right here, I have series of support areas, because this area also serves as another support zone. So basically, the market can either bounce from here towards an upside direction or even move down to this particular point. So I want a strong candlestick or a consistent candlestick lining up so basically there are also right here there is also a resistance point right at this point. So right here I still need one more candlestick. Let me wait for the next candle. So right here I can go for a down position. So basically I'm hoping the market move down to this support zone. So I have 41 seconds to go. So right here I have 6 seconds to go. And I also make another win. So this is how I always make use of a key support and a key resistance level in the market. I hope you find value on this video, and if you do ensure you subscribe to this channel, hit notification bell so you miss any of our amazing videos. Thank you so much for watching. Till I see you again in another video.